Welcome to The Explainer. Today, we're going to talk about the architecture of value. We're going to break down what truly gives hard assets, things like gold, silver, and diamonds, their worth, and how some pretty powerful new forces are reshaping all of that right now. But before we get into the weeds, let's start with the most basic question of all. In a world full of digital currencies and super complex financial stuff, what actually makes a simple piece of metal or a shiny stone valuable? The answer, it turns out, is at the very heart of our entire global economy. All right, here's our roadmap. We're going to start with the pure physics of wealth, then we'll climb this ladder of value from industrial metals all the way up to the monetary aristocrats. We'll see how value gets perfected in a stone, and then explore this new digital code that's changing absolutely everything. And finally, we'll bring it all home and see why this ladder actually matters to your wallet. First up, the physics of wealth. Look, to really understand price, you have to get a handle on two fundamental forces that create value in the first place. Scarcity, how hard is this stuff to find? And durability, how well does it survive the test of time? Okay, so think of an asset's value as a constant tug of war. On one side, you have its industrial utility. That's what it physically does. Can you build a skyscraper with it? Can it power your smartphone? But on the other side, you've got this thing called monetary premium, and that's all about what it represents. Is it a trusted way to store your wealth and carry that value into the future? The price of every single asset we're going to talk about is just a negotiation between these two ideas. Now, this journey of increasing value, it isn't random. Not at all. It's what you could call an ascending form, a ladder that's literally built on physics, rarity, durability, and utility. And today, we are going to climb it step by step. And our first step on that ladder starts right at the bottom, at the foundation, bronze, the industrial workhorse. At less than a single penny per gram, bronze is the absolute bedrock of industry. It's an alloy, a mix of copper and tin, and it's essential for pretty much everything from the pipes in your house to the electronics in your pocket. But here's the key. Its value is tied directly to how common it is. It's super useful, but it is not rare. This brings us to this really interesting concept called food value. Think about it like this. In a total crisis, if society breaks down, bronze is incredibly valuable because you can make tools and weapons with it to survive. But in a stable, functioning economy, it has a very, very low monetary premium. It's all utility and basically zero status. So now we start climbing higher on the ladder. We're moving up to the assets that beautifully bridge that gap between pure industry and pure money. These are the monetary aristocrats. First up is silver, the volatile hybrid. Yeah, for centuries it was known as the people's money, but in 2026, its value is just exploding for a totally different reason. As the most conductive element on the entire planet, it is absolutely essential for things like solar panels and the data centers that run our AI. Industrial demand, driven by the green energy transition, is now outstripping supply, making silver the engine of what economists have started calling greenflation. And this chart just brilliantly illustrates that hierarchy, right? You see the huge jump from silver up to platinum and gold. But wait a minute, hold on. Platinum is 30 times rarer than gold, so why on earth is it trading for less than half the price? What's going on here? This is why they call platinum the sleeping giant. See, its price got hammered by the global shift away from diesel engines, where it was a key part of catalytic converters. But now, it's waking up. It turns out platinum is the critical catalyst needed for hydrogen fuel cells, which places it right at the heart of the next energy revolution. The market is only just now beginning to price that future in. And that, of course, brings us to gold. This quote really reframes our entire understanding. The critical point is that gold is a measuring stick. Its rising price is more like a report card on the falling value of currencies, like the dollar. It's not just another asset, it's considered Tier 1 capital. That's the highest quality asset a central bank can possibly hold. All right, at the very top of our physical ladder, we find an asset where value isn't based just on weight or rarity, but on perfection. We're talking about diamond, the absolute pinnacle of value density. See, unlike a bar of gold, a diamond's value is not linear. It's not just about how much it weighs. Instead, its value is determined by the multiplication of these four key factors. A huge diamond with bad color and clarity? It's basically just an industrial tool. But a flawless one? Well, that's a vessel of incredibly concentrated wealth. And what's wild is that technology has completely split this market in two. Lab-grown diamonds, which are chemically identical to natural ones, have crashed the commodity tier of the market. And this has had a fascinating effect. By making perfect but common diamonds cheap, it has made the truly rare natural diamonds even more exclusive and valuable.
So, we've reached the top of the physical ladder, the densest form of value we can hold. But even diamonds have physical limits. So, what comes next? Well, the answer isn't physical at all. It's the digital ghost in the machine.
Bitcoin competes with gold for the exact same reason: provable scarcity. But their scarcity is guaranteed by two completely different codes. Gold's code is written in the language of physics, its unchangeable atomic structure. Bitcoin's scarcity, on the other hand, is written in the language of pure mathematics, a cryptographic code that strictly limits it to 21 million coins, ever. And this, right here, brings us to the end game of portability. Bitcoin basically solves the physical limitations of every other asset on our ladder. You want to move $10 million in gold? You need an armored truck. In diamonds, you need a whole security detail. In Bitcoin, you just need to remember 12 words. It is the ultimate evolution of portable wealth.
So, why should you care about any of this? Because these ratios, these prices, this whole ladder of value, they are not just abstract concepts. They have a direct, tangible impact on your wallet and on your daily life.
These four relationships are basically the gears of the hard asset machine. They tell us what the market values right now: money versus industry, safety versus utility, quality versus quantity, and physical versus digital. And look at that gold to platinum ratio. That is a historic anomaly. It's signaling deep stress and maybe potential opportunity in the market.
And this is where it hits home. The rising price of silver makes green energy more expensive. The high price of gold makes your smartphone more expensive. This is that greenflation we talked about in action. As these assets rise in price, they widen the gap between people who own them and people who just earn a paycheck, eroding the purchasing power of your cash.
So we'll leave you with this. In a world that's moving so fast towards dematerialized digital value, a world of pure code, what becomes of the wealth that you can actually hold in your hand?